Testing, testing. Let me know if you guys can hear me and see this chart saying weekly outlook, and we will get into this. Hello, hello. Thank you, Pablo. Jeez. What's up, Ozon? Thank you. We'll give it a minute or two. Another week at hand here. Super Bowl Sunday. Who you guys got? Chiefs or Eagles? I know most people hate on Mahomes, but objectively, it's pretty hard to bet against that guy, huh? Unless he was playing Tom Brady, but Eagles. Yeah, I think most people are rooting for Eagles, but what's up, Naveen? Sam, what's up? David, Antonio, how y'all doing? Naveen. All right, we'll get into it here. So I won't keep you guys too long. To start off trading week, we need to look at our roadmap, which is the economic calendar. So this last week we had NFP. This week we have another large red folder event, which of course is CPI on Wednesday. Okay. Ahead of that, we have a Monday with no red folder news. So obviously tomorrow. Now I know some traders have rules that if there's a Monday with no red folder, they don't trade personally. Me personally, from my end, if there is good price action based on what the market is telling me, if the model is there, macro power of 3, if I want to engage with price, then I'll simply take the trade and accept the risk, right? Now, if I start to see seek and destroy conditions, things that are of concern for me, right off the top of my head is if London high and London low is taken before, if I see an opening range 9:30 to 10 a.m. tomorrow morning that is not being allowed to move around, seek and destroy vibes where they're taking out swing highs, going for swing lows, reversing it back into the range. Everything that we know how to identify seek and destroy with, then it just gets added to my context for that particular session. Okay, it's a Monday with no red folder news. That could make it more likely to be a bit more difficult. Now, on top of that, if I'm seeing not the best, most efficient price action being presented to me from the market, and I do get an opportunity, then I really want to be sure that I'm taking partials, managing risk properly if that opportunity is given, just in case we are indeed in seek and destroy. I want to be paying myself if and when the market makes it available. So tomorrow, February 10th, no red folder. Tuesday, we have Powell at 10 a.m. So this could be a tricky morning for us New York AM session traders. On the opposing side of this, when we have Powell testifying like this during the New York AM session, even sometimes when he does FOMC, it can be better price action, of course, in this case in the afternoon, but pre-market. We can get good macro power of 3 setups, and many times those macro power 3 setups are great scalping opportunities, right? So it doesn't mean you have to wake up. It doesn't mean it's a guarantee, but sometimes, putting together the context behind this is that if Powell's testifying at 10 a.m. and it's going to be seek and destroy, they're going to hold it, it's going to be highly manipulated, then maybe they'll allow it to move around more freely pre-market, right, and after this event. So if you're waiting till 9:30, and we'll see what price is looking like then, but it's best to wait till after this to see if there's any good setups and just overall structure that looks enticing for us to get involved with based on how we trade. So Tuesday, 10 a.m., Wednesday, we have that 8:30 CPI event. I recommend waiting until after that to trade, especially, again, if you're a New York trader. 10 a.m. Powell testifying again. So this can be a tricky morning, right? We just have to see what's given, manage risk. Thursday, PPI. Friday, retail sales, red folder, of course, at 8:30. So another news-packed week here, and we just have to take it step by step. And again, I know I sound like a broken record sometimes, but prioritize risk. Don't try to be a hero. Follow max trade per day rules, okay? And protect, when you have profit, when you have a winning trade, don't be greedy and rush back in. Just stack that one winning day, get that positive snowball effect, lock in that green day, get ready for the next session, especially when we have this much news, okay? So let's progress here. And now that we've gone over the economic calendar, we can dig into some charts. So we're going to go top down, of course, and we're going to start on NASDAQ's weekly chart here. Now, we have all-time high here, and we have a weekly swing low here, another one here, another one here, right? Above market price, and we'll see this more so as we progress a bit clearer. It's, depicting the same thing. We have all-time high, and we have these two relative equal highs, okay? So the market really since mid-December to now, since 2025, the start of the new year, it's been very range bound, and we have to be very selective with our trades, but really not marrying a bias. And I'll kind of dig into that more as we progress here. Going to S&P's weekly chart, we just see more of the same, where we have relative equal highs, of course, all-time high as well, above current market price right here, and relative equal lows down here. Swing low, relative equal, another swing low right here. Okay, so we're range bound since we started this year. So as we progress to the daily chart, this is kind of what I want to discuss. Of course, we can do our best to try and determine, just as order flow continues to be presented to us, determine, okay, are they going to run the lows of the range first or the highs, right? So we can mark out SIBIs like I have here. And really this is the SIBI could be anchored all the way down here, but I'm depicting this volume imbalance that we rejected off of, and this inversion / small BISI down here that we found support on a closing basis off of, right? So we can do that to try to put together the pieces of the puzzle, if you will. But again, I'm really not going to be marrying any bias, and ultimately it just comes down to, is our model there that makes sense, and can we execute on that model and manage the trade how we should be, responsibly, professionally, with proper leverage. So at the bottom of this range, we already mentioned the engineered sell side. Okay, and this is the daily chart, of course. Imagine if this was the 1 minute time frame, the 5 minute time frame. If you have heard me speak about structure like this before, I often say our priority is what? Liquidity, right? More often than not, if we try to, again, stick with the idea that this is a 1 minute chart, if we try to place our stop loss at some internal swing low for a long or internal swing high for a short, we're more than likely going to get stopped out. So the best setup in those cases, and in this case with the daily chart, the best depiction on what is going to occur is when one side of this range gets purged. Okay, and we're going to continue, of course, to go top down to the 4 hour and hourly to try to get a better idea of this and do our best. But first and foremost, my priority is on the liquidity over the PD arrays and algorithmic signatures. So, you might be saying, okay, well, why do you put the SMT down here on your chart then, right? If I start to see bullish order flow continue and bearish order flow break down on the lower time frames, 4 hour, 1 hour, etc., then I'm just going to use this as my framework to build my narrative, right? And say, okay, it still looks like the top of this range is going to get purged first. All right. So S&P as well, it's pretty similar. I didn't put it here, but we rejected off of this volume imbalance, but we also found support with an SMT in this BISI here, right? So we're sandwiched between these two PD arrays on both markets, and we have liquidity above and below current market price. I'm seeing some comments about the audio. A couple people say it's not working. How is it here? FEG Trader, what's up? Audio is good. Can you guys give me some feedback just so I make sure it's not on my end? Everything looks good on my end, the streaming settings and everything. Just give me a few okays and then we'll continue. And if it is giving you trouble, maybe just try to restart. Audio's good. Good. Okay. Thank you, guys. Thanks, Ross. Bob, thank you. Thanks again, Pablo Ozan. Okay, cool. Soupmeister, thank you. All right, so we'll continue. So again, we need to go down to the lower time frames to try and get a better idea of what's occurring here. And we're going to do that on this 4-hour chart here. So if you were in the stream yesterday, I kind of discussed some of this. And we were reviewing the week, but also kind of prepping for this week. A major factor here is last week's new week opening gap, right? So obviously we had this large gap down, okay, where we closed on this weekly close here and opened, look on the right side here at these orange lines, almost 400 points, a very large gap. And it just turns out that it's right in the middle of this range, right? So this is the external daily engineered buy side we mentioned at 22,100. We've been mentioning that for some weeks now. This high here, and I'm going to get to this in a second, and the engineered sell side externally down here. Now we see some internal sell side liquidity here with the SMT. So we have to take it step by step. And really, since the last 2 weeks, we have seen enormous gap downs. We'll have to see what kind of new week opening gap we get today. But we had NFP Friday, obviously. This sent us lower. Initially on NASDAQ here is 4 hour time frame, we went higher. And technically we did purge this high here, right? By if I'm not mistaken, maybe 2 points or something. But I'm looking at this as a shallow stop hunt. And I still think on top of the relative equal highs above here at 22,100, I still think a lot of traders are going to be looking at this as strong resistance, place of rejection, by extension, the way us ICT traders view the market, right? Plan and engage with price. I think there's a lot of liquidity still up here, right? If this was a true reversal point, and again, since we have liquidity on both sides, we could still go lower first and then leave this. So I have to see what structure develops, right? And how this week progresses, especially with CPI. But if and when we do see some sort of reversal, bullish order flow continue, I still think it's completely reasonable to expect at some point price to get back up here to 21,966. So previous week high here with this relative equal high here, and the engineered buy side liquidity pool again at 22,100, 11.25 above. Okay. Now on the opposing side, let's say this is going to get purged this week. We, for the best trade setups, the best higher time frame analysis, the best depiction on what our directional buy should be, to start the week, I want to see some form of manipulation, right? So where is the opposing liquidity? Where is the opposing discount inefficiencies? We have a daily low. So this is last Wednesday's low here at 21,429.75. Tuesday's Asia session low here at 21,242.5. And note how we're in this large new week opening gap, as I mentioned. Okay, this is something I mentioned in the public stream yesterday in Discord, where this is a large gap down, and ICT spoke on this in, I believe, one of his live streams before, where we went lower, but there wasn't efficient sell side delivery to and through this new week opening gap. We gapped down and then we just delivered higher, right? So just building a narrative. I also think it's reasonable for us to get down to some degree to this new week opening gap, and stacking confluence, we have a daily low right here, last Wednesday's low. So if we start to see price, especially to start the week, go down lower, this will be my target here, 21,429.75. That'll be my first sell side draw. Okay, now if and when that occurs, I need to see some sort of reaction. So note it's not drawn here because I wanted to depict the liquidity pools first and foremost. But note this 4-hour BISI here, resting in the upper portion of this new week opening gap. If we see a sweep and close below this on the 4-hour chart, then I'd want to see if we can get delivery for a continuation down to Tuesday's Asia low here. Again, 21,242.5, right? And at that point, probably new week opening gap low from last week. Okay, so I need to see what kind of reaction we get after purging last Wednesday's low, along with the candle close relative to this BISI, because you guys know how I classify inefficiencies. If we have a BISI that was used to send us higher, then we close below it, I'll look at that as a high probability bearish inversion, right? And if we are to see lower prices and we are weak, we should reject out of that and reach for the next discount objective, which again, we have a session low right here, new week opening gap low below it. And again, the framework behind this is that we just had a gap down and not really efficient sell side delivery to and through this. Okay. If you were in that stream yesterday in Discord when we were reviewing, it's not depicted here because I'm trying to prepare for this week and keep it as simple, as clean as possible, especially because, as we've mentioned, we're so choppy on the daily range. This is showing that all last week we were taking out daily highs. We left this low here right after the gap down. I believe this is Monday's low. We left Tuesday's low. We left Wednesday's low. Okay. And then just Friday, we took out Thursday's low after that NFP release. Right. And we were taking out daily highs here, daily highs here, daily highs over here. Ultimately, shallow stop hunt, as I mentioned, but we did purge that right back down to the new week opening gap. Right. And look at that candle close, by the way. It's probably random. Okay. So I really need to be relying on the way that I read price. And again, if you've been in streams before, following the way that I classify certain PD arrays and how I utilize them, that's what I'm going to be relying on as the week progresses. Right? So, you know what I mean by that. Just things like if we get a close below a 4-hour BISI or a 1-hour inefficiency, I'd want to see if there's signatures that suggest continuation, as we mentioned. Okay. Now, if we progress to S&P's 4-hour chart, it's more of the same, depicting the sell side not being taken from last week and daily highs being purged here. Again, we obviously had that gap down as well last week on the S&P. Buy side delivery to and through it, leaving behind sell side in its wake, but we haven't still had clean sell side delivery to and through the new week opening gap here. Okay, so it's all just about building confluence, understanding context, especially when we're seeing daily consolidation, a range being built on the higher time frame. Okay, there's really not much. Let me see. So I'm not missing anything. Obviously, this is the external engineered buy side we mentioned on the daily and weekly chart. We saw all-time high here. Then we have this high here and this high here. So technically, this is an SMT at the highs too, right? If we really want to be technical about it, but since we had such shallow stop hunt, as I mentioned on NASDAQ, I think we can still get up here as well. And this is a high, a relative equal high, ultimately falling short of all-time high. Okay, it's just a matter of when. Okay, and I'm going to use this previous new week opening gap to try and gauge that. Right, this is my main tool at the moment, especially because it's in the middle of the range. Okay, now if I progress here to the 1-hour time frame, I want to dig into this new week opening gap a bit more. If you were in that stream yesterday, we were talking about measuring the new week opening gap. We were using not only 50% or consequent encroachment, as you see here, of the new week opening gap. We were looking at the quadrants. We were analyzing the 8th levels. We were even analyzing the 16th levels. Okay, so recall how we were looking at that, and we can still, as I mentioned in the review, I forget if it was yesterday or the day before, but we can still use those levels for smart money handshaking as we progress throughout this week. Okay, but I wanted to just depict a potential draw first and foremost to start the week. We already mentioned Wednesday's low, but notice where that is residing. It's right above 50% of the new week opening gap. And as I've mentioned multiple times now, we haven't had sell side delivery to and through this, right? So Wednesday's low being a daily low with a new week opening gap that hasn't had sell side delivery to and through this, and CE right there, this is a reasonable sell side draw in my opinion. And again, it's all about the reaction after, if and when this is purged. Okay, do we start to bounce here and start to inverse 1-hour SIBIs, 4-hour SIBIs? Then we might want to drop to 50% of this range. And then, as I mentioned, I'll look at order flow. Do we get a high probability bullish inversion, right? Are we seeing bearish inefficiencies fail to act as resistance and push price lower? By extension, are we closing above those on the 4-hour hourly chart, 15-minute structure as it develops? Okay, but this is the main area for me right here. Okay. On top of this as well, like let's say we are truly weak here and we're going to leave these highs for after we purge the sell side objectives, all the engineered sell side we've mentioned, not only here. Simply put, until I see more structure, if we get below this new week opening gap on a close, I want to see us show a willingness to get down to last week's low, that daily discount or bullish SMT fail, and ideally stay below 50% of this new week opening gap, right? Because I'm looking for signatures, especially when we're in consolidation. I'm looking for signatures of weakness, right? And failure to reach CE, or if we do reach up to it, I want to see bodies respect it. I want to see us show an unwillingness to push away from it. Okay. So progressing as well. Similar plan here on S&P. All about the reaction. Again, notice Wednesday's low, that level on the right side, as you can see there, is 6020.25. And it's right below 50% or consequent encroachment of the new week opening gap from last week, right? So this is a reasonable draw, in my opinion, if we do see that bearish order flow. Let's say we have a small gap this week, right? Or we gap up a bit. I'd want to see some sort of, maybe this hourly swing high or delivery to this SIB because it's in a premium of this current range. And then we have to see, an hourly BISI start to fall over the current new week opening gap, get closed below, and then send us down to here, right? Me personally, for when I trade, I am a New York session trader, so I need to see where we are as we head into 9:30 open tomorrow. But if you're an Asia/London trader, obviously you're going to want to add the new week opening gap, whatever we get, as a potential way to, you guys know who have been following me for a while, if we can use that new week opening gap as a draw or a place where we could see rejection and frame an entry off of. But you really want to look at like this hourly swing high and this SIBI as an upside draw. A low here, I'm assuming, I'm not sure, but this is probably like previous day PM session high or previous day lunch high. These session highs should be your objectives. And I often get questions like, how do I know if I should target like this random 5-minute swing high or 15-minute or hourly, right? We can look plain and simple for relative equal highs and relative equal lows. That's fine. And that's a strong draw. But to help filter things out, targeting and utilizing session liquidity, time-based liquidity, really helps filter out a lot of that guesswork, if you will. So I'll often look at, of course, previous day high, previous day low, but we can break it down where we have like previous day PM session high, previous day lunch high, previous day AM high, London highs, Asia highs, etc. Right, and it's all just about breaking it down to when that moment comes when we do execute. When I see that macro power of 3 setup, I'm looking for, maybe an opening range high, some form of intraday engineered liquidity pool as a first target, and then the next session high if I'm bullish as my terminus, right? And then I'm just looking at order flow on the 1 minute relative to higher time frame structure. Okay, and ultimately that's what it comes down to. We can look at the higher time frames and build a narrative, build an idea on what is likely to occur, potential scenarios, so we can be as prepared as we can be, especially, again, with the daily consolidation and the large gaps we've seen. Not only a new week opening gap, we've had some pretty large new day opening gaps, but it just comes down to, can we execute our model if and when it is present, and in between those moments, control ourselves, not chase price, right? When we have a losing trade, your reaction to that loss, when it inevitably comes, is the most important thing, right? If you go back in and try to get it right back right away, even worse, increase your leverage, it's going to be hard for you to succeed if you can't control yourself after a loss. And even after a win, if you go in and get greedy, try to triple your profit for the morning or whatever session you're trading, you give it back, then all of a sudden your profit from what in your mind should have been and felt like a winning day, you're like, wait, now this is a losing day. This was a winning day. Then your ego kicks in, human nature. You want to get it back right away, and it's more likely to put you in a position to go on tilt, right? So we can do our best to get out of our own way, where when we have things like a max trade rule, once you hit that max trade per day rule, you just close the laptop and walk away, and you come back and do your review after market close, right? And if you've been struggling, like I often have people ask, what should my max trade rule per day be? Right? You should, for your progress, just literally you can do 2 trades, but even if you just did 1 trade per day, and your perspective, your plan coming into every session when you're at the charts is, I want to take the clearest, the best looking setup that I can today, right? Whether it's a win or a loss, that is my objective. That is how I look back on this week as a good week, a week that I made progress, right? And then also with your journaling process, your reflection process, if you're only taking 1 trade per day, when you sit down after market close, after you take that trade, win or loss, you can really dig into it more and get more out of your journaling sessions, where you can say, okay, this was a winning trade, but I got stopped in profit. Like, did I trail my stop right? Was I too early? Looking at the market, looking at technicals, why shouldn't I have trailed it? Why would I have not changed it? Why do I think I performed well, right? Or if I took a loss, was this my system? Would I take this setup again? Was this in the direction of the higher time frame or intraday trend? Right? Was this a FOMO trade? Be objective with yourself. But if you're only taking 1 to 2 trades per day, you can get more out of your journaling session, right? If you're over trading and trading 20 times per day, 10 times per day, you're not even going to remember what trades you took to review them. And then you say, oh yeah, journaling's important. You don't even remember, right? It's harder for you to understand your frame of mind, not only with like the setups when you look at your executions, but what did I think at this moment when we closed below this inversion, and then it started to move back against me, how I didn't want to see it, right? All those little intricate details that are required to try to gauge order flow and manage a position. It's easier to reflect, get better, improve in our skill set, which is reading price action, when we're not taking a ton of trades, when we're only taking 1 to 2, right? So my rule is never more than 3 trades per day. So if I have 1 win, right, I need to be done. So I don't give it back, and I put myself in a good position to not go on tilt. Okay, if my first trade's a loss, ICT has spoken on this again. I'm sure a lot of you guys hopefully apply this. If your first trade's a loss, you can go back in, not just because you took a loss and you want to get it back, if your model is present, but you have to reduce your leverage in half. Okay, so the framework around that as well is, if that second trade is a loss, you're not just doubling down into drawdown. You're managing it properly, but at the same time, you're not trying to rush to get it back and focus on the money. You're focusing still on a good setup, right? And you're going to be more focused on price action instead of getting at a drawdown, because you're not, over leveraging. You need to have a good trade. You need to focus on structure. Okay, and if both trades are a loss, obviously you're done for the day. If the first trade is break even, the same first 2 steps apply. That second trade, if it's a win, you're done. If it's a loss, you can try to trade again with less leverage. Okay, and I know I've said this before on Twitter Spaces, here on some of the streams on YouTube, in Discord, whether it's stream or just in chat or something. Like, I can sit here and tell you what I think is going to potentially occur this week for a weekly bias or a daily bias, or I can do my trade reviews. I can tell you the model I utilize on a day-to-day basis that, URTO members use as well. I can sit here and show you that, but I'm not going to be able to tell you to close up shop after you take that losing trade, or after you take that great winning trade and you feel that euphoric feeling, right? And you want to go right back in because it felt good and you feel like, oh, this is easy. And that's when bad things are more likely to occur. I can't control that. That's where your progress comes, right? So if you have Monday through Thursday, let's say every day you take 1 trade and you have 4 great trades, and then on Friday you feel like a god, You feel like you know Enigma, you know exactly what the market's going to do. You go in there, you take one loss, and all of a sudden it's like, wait, I was on a 4-day win streak. Right? That's unusual. I can get this back right away. Your brain starts to try and convince you of that. Right? And then you go back in, erase, half or all of your progress from the week, and then you have to sit with it all weekend. Right? And it's not a good feeling. Whereas if you were the professional trader and not the novice trader, you say, okay, I had a good week. There was a good setup on Friday. Didn't pan out. That's my rule, my system of how I engage with price, and my max trade per day rule protects me from going on tilt, puts me in a good position to win and not blow accounts. Not, more importantly, destroy my confidence that I was building from a good week, a profitable week. Not only just monetarily, but your confidence again. Right? Because then it's harder for you to come back on a Monday. You're going to say, I'm getting the shit back right away. And then you're stuck in that negative cycle. Right? It's so easy to, and the reason, I want to call it ranting, because I'm not screaming and stuff, but spend time on psychological stuff. First and foremost, by no way am I neglecting the importance of technicals, of time and price. You guys know I love my macros, of algorithmic signatures. Everything we look for in the market is extremely, extremely important, and you need to have that experience and skill set in order to be successful, right? So it's a balance, but you also need your ability to manage oneself. You need to have discipline. Okay, I use this analogy all the time, and I do these talks all the time because I know how quick you can go back into that. All it takes is one bad day where, maybe you didn't sleep well, maybe you're in an argument outside the charts, maybe whatever, who knows, right? Sometimes nothing happens. You just get in that moment. It's hard to resist the temptation of revenge trading, right? Increasing leverage, going on tilt. Sometimes it's just hard. It's human nature. But max trade rules, proper sizing, protects us traders from doing damage to ourselves. The market wants us to be emotional, wants us to go on tilt, wants us to feel empowered, like we can get it back right away, right? And we can't control whether the trade we put on, no matter how good it looks, is a winning trade or not, right? So we're constantly dealing with uncertainties, but we can control and make certain that we don't break rules, that we don't stray away from our system, that we only take our max trade rule per day, 1-2 trade, whatever it is for you traders personally. You can control that. You can control if you chase or you don't chase. You can control if you walk away after you have a winning trade or you hit your max trade per day rule. You can control those things. And again, trading is difficult. Trading is uncertain. Trading is stressful. So we have to do our best to reduce that stress, reduce that uncertainty. Okay. And I mentioned this in the stream the other day in Discord, like, you guys can watch thousands of hours of ICT's content, of my material, of other ICT traders on YouTube. You've spent hundreds, thousands of hours in front of the charts trading, prepping for a week, for a day, reviewing, back testing everything, right? Most of you have the knowledge, and now you just need to understand yourself. What makes you go on tilt? How you can put yourself in a position to succeed, to not go on tilt, right? Because objectively, again, I take losses all the time. I don't have 100% win rate. I'm not some trading god. I'm just a guy, just like you guys, right? And I used to be so impatient. I used to get so frustrated after a losing trade, right? And I spent all my days, obsessed with trading, watching ICT, looking at markets, back testing, trying to build models, trying to figure out what's important, what's not important, what do I need, what do I not need, more importantly, right? And still, no one likes to have a losing trade. I can sit. It's easy to sit when the market's closed, when you're not trading, to say, oh yeah, be disciplined after a loss, right? But when that loss actually comes, it does not feel good. It doesn't feel good for anyone. I don't want to take a loss. It doesn't feel good when you take a loss, right? But I'd rather sit with the discomfort from that one losing trade than put myself in a position to make it way worse than it needs to be and have to look back on a day or a week and say, damn, if I just followed my max trade rule, I wouldn't have blown that account or hit max daily drawdown, or now I feel lost in the markets and my confidence is damaged. I feel like I took steps backwards this week. Right? And I'm already seeing here, people are starting to leave the stream. And again, I don't care. But those who prioritize self-management, self-mastery, discipline, okay, and understand that's your job on a day-to-day basis in the markets, you guys are bound to succeed. And this thing can, this framework, this perspective on the market can change right now. It can literally change right now. Like most of you guys, if you aren't profitable yet, if you aren't consistent, if you aren't confident, this can change right now, right? If you say to yourself, enough is enough. I'm going to have losing trades that look like great setups. I'm going to have winning trades that look like and was a great setup, right? I can't control the outcome. But I'm not going on tilt anymore. I'm not revenge trading. I'm not breaking my max trade rule. I'm not increasing leverage. I'm switching to micros till I find consistency. That's my advice for some people who don't want to size down as well. Like if you're emotional and then you're also over leveraged, you're literally getting in your own way, right? And you can fix that right now, right? You can't go back in time and change those days you went on tilt. You can't go back in time and say, oh, if I over leverage and switch to micros, then that max daily drawdown for 1,000 would have only been, 100, right? Just think about it this way. Like if you're trading micros, and just for time's sake and to keep the analogy, hypothetical situation easy to describe here, like let's say you're trading minis and your max daily drawdown is $1,000 per day, especially with NASDAQ, like you can put on 2 trades and then you're pretty close, depending on what the structure looks like, you're pretty close to that max daily drawdown. Whereas if you trade micros, it literally takes you like 10 trades, depending on how many you're trading, but it takes you so much more trades if your stop loss is like $100 or $50. Right? And you start to stack base hits instead. Losses affect you less. Right? So my advice is to, if you have been over leveraged, prove to yourself, stay sized down and prove to yourself that you can be profitable for a month, 2 months before you start to size up. And I spoke on this, I think, at the Twitter space to start the year. Like your plan can literally be start with 1 or 2 micros. Right? Until you have that proven, maybe 2 weeks, 3 weeks, 4 weeks, you can measure that yourself. And then you just bump it up 1 micro. Right? And you're taking incremental steps, making progress, getting okay with dealing with leverage, and still proving yourself, okay, am I ready to increase leverage? Right? Maybe you'll go from 5 micros to 7, and for whatever reason that you start to see the profit and loss a little bigger, a little larger, and then you'll say, okay, yeah, this is too uncomfortable. It's affecting my decision making, my trading. I need to stay down at 5 or 6 micros for the time being, right? Maybe for another 2 weeks. Keep hammering that. And then as time progresses, as you gain more experience, then you embrace that discomfort and slowly, incrementally increase that leverage. Right? And now doing all of these things, not only proper leveraging, but following a technical system, following a system that allows you to perform well as a trader. Max trade rule, times that you're only allowed to trade, i.e. macros, sessions in general. Like if you're a New York session trader, you shouldn't be waking up and trying to trade Asia or something just randomly, right? You're trying to put yourself in a position to win. Right. And once you start to do all these things and everything is aligned, You are now an actual trader and not just a gambler, right? Because you're focused on, your perspective is you understand and acknowledge and accept that the market is uncertain. You can't control it. You literally can't. I can't. We can't control what happens. But your priority is on your performance, right? And you have to show up every day and understand that. Some days are going to be harder to get a technical read. Some days, for whatever reason, it's going to be harder for you to resist the temptation to chase. Sometimes you have the bias correct. The draw on liquidity is so clear, and then the market will just run without us and doesn't give us an opportunity to enter. All these little nuanced situations that are so unique to us as traders that we know, those things are designed to frustrate us. But, think of in a sense, in this, what I'm about to describe, like the market as your competition, if you will. Like you're playing chess, like, oh no, you're not going to outsmart me. I know this ran without me. I didn't get it. I'm not going to let this affect my next trade. Now I just have to wait. I just have to. I'm not chasing. I'm not straying away from my strengths, macro power of 3, the way I engage with price. The market is not going to make me stray away from that. I'm waiting for my system to be apparent, to be clear, to come to me, right? I've often said this analogy as well, and hopefully this will make it click in maybe someone who's new here in their minds. Think about especially if we're operating on the 1 minute time frame, right? We need to be so clear, even like the 5 minute time frame sometimes, right? By extension, the lower time frame you go, the more low probability setups there are. On the 1 minute with macro power 3, when everything is in motion and we have the criteria for entry that tells us it's likely to be a high quality setup, then we can get extremely precise entries and an idea of what is likely to occur in price, right? But if we can't control ourselves when it's not so clear, when we can say, okay, yeah, the entry criteria is met, but this is a low probability setup because we have news in 10 minutes, or we have equal lows below this bullish inversion during this macro, or equal highs above with a London high above where my stop loss would be. We know that's not a smart idea, right? All these scenarios that we face. Okay, but the analogy is, imagine you're standing at the side of a river, right? And the market is the river, and you're waiting for a piece of gold to come to you, right? You're waiting for that one piece of gold to come to you. And it's a sunny day and the sun's gleaming on the river. Okay, so every time a little rock goes by, it goes under the sun, and you're saying, that might be it, right? That might be a piece of gold, but I'm not sure. So I'm going to wait for it to be so clear so I can get it, or it comes to me. It comes right to my feet, right? And you're looking at all the other people on the side of the river who are jumping in and taking the bait at every rock that goes by when they're uncertain, right? When they're just jumping in just in case they miss it. Oh, what if this is a piece of gold and I miss it? Because they have a scarcity mindset, right? Back to the trading, you're not trusting your model is going to come again. You think today's the last day to trade. You think this opportunity is the last opportunity to come. It's a low quality setup, right? Where everyone else is jumping into the river when it's really just the sun gleaming on these little pebbles going by. Then all of a sudden, you're rewarded for your patience. The age-old adage is patience pays in trading, right? And it's true. You're rewarded for your patience. That piece of gold comes right up to your foot. You see it. You're 100% sure it's there. That's your system. That's your model. And you pick it up. Right now, everyone's swimming away, getting swept down the river. And you're sitting there because you were patient. And you let your model come to you. You let the piece of gold come to you. You waited for it to be so clear. Right? And you controlled yourself. You controlled what you can do. Right? You can't control if that piece of gold comes to you now, 5 minutes, this afternoon, tomorrow. You can't control that. Right? But you can control, okay, I'm just going to take the bait on every little rock that goes by and jump in and hurt myself. Right? So, again, prioritize this week. I know I've been going on for some time now. I didn't really plan to do this, but prioritize this week everything we discuss here. You want to perform well. That's your goal, right? When we make mistakes, whether it's a losing trade or maybe we trail too tight or whatever, forgive yourself, acknowledge it, review it. And again, if you're not taking 10 trades per day, if you're only taking 1 to 2 trades per day, you can really dig into each trade way more than if you were taking a ton of trades, and you're progressing more, not only technically, but in your performance as well. You reflect on both aspects, right? Okay, I'm not going to long this because there's equal lows below, right? And then you ask yourself, okay, well, why did I enter this? That technical aspect, but I felt like it was going to run without me. So you still need to remind yourself on a daily basis, and here in your reflection and your journaling process for that particular day, that particular session, and say, okay, in that moment, it felt like this was the only opportunity, but I need to remind myself my trading career is not defined today. It's an accumulation of all of these opportunities in our system. Okay, and just to wrap up, again, I can show you all the examples of macro power of 3, any strategy in general who has success with whatever strategy it is, ICT or not, but you have to be the one to perform well and stop yourself from doing damage to yourself. So I hope you guys enjoyed this stream. Leave a comment, leave a like if you did. Any questions, just give me a ping, of course, in the comments or like in Discord.